Today we are going to talk about the book A Random Walk Down Wall Street. So let's start our walk and get a better image of Wall Street. Our walk would have 6 stops. Our first stop is the confused zone. People at this zone usually confuse investing with speculating. Investing is a long-term art where you buy and hold for a long time, whereas speculating is like trading where you buy and sell in a short time. The returns of investments are slow but certain, whereas the returns of speculations is quick and uncertain, just like gambling. You may or may not win. A better way to explain speculation is by calling it a sophisticated casino. People might get a winning shot but lose at another shot. People who want to get rich quick get caught in speculation and keep on playing till they lose. If you want to get rich, go for the slow route of investing. It takes time, but the results are certain. Now, let's go to our second stop. This is called Castle in the Air. It works on mass psychology, which states that it's okay to pay 3 times worth the value of a stock if someone else is ready to pay 5 times for it. For example, let's consider the stock value of ABC company as $10 and is currently trading at $30 due to some good news at the company. This creates an illusion among people that if they buy the stock, it would go to more heights. So more people buy it and stock reaches the value of $50. Therefore, according to Castle in the Air theory, it is okay to pay more if someone else is also willing to pay more. All the smart people among you would have understood the issue with this theory. If you don't find any issue with this, then let's discover the ultimate ending of this Castle in the Air theory on our next stop. Our next stop is one of my favorites, bubble bursts. Markets get reversed at unstable heights and the people of Castle in the Air are unable to anticipate the stock coming tumbling down. Let's consider the same example of ABC company. At $50, the stock gets unstable and comes tumbling down to $15. In worst case scenarios, it might come down to less than $10 too. People who bought these stocks at $50 lose a huge chunk of their money. This is not a tragic fancy tale. History proves that this has happened n number of times. It is like a bubble which goes up in the air and after reaching a height, bursts. Nobody, and absolutely nobody, can predict the height at which it would burst. Only the people who entered in the initial stage and served at considerable heights win. One of the bubbles which we all have lived through is the Bitcoin bubble. It costed hardly a few dollars in 2015 and then went around to $20,000 in 2017. Many people might get offended if I call it a bubble, but the price of Bitcoin came down to $3,000 in 2018. So people who entered at high prices have lost a huge chunk of money. There are many more bubble busts in history like the dot-com bubble, the internet bubble, Japanese land bubble, South Sea bubble and so on. The stories are tragic, but the journey through those bubbles is noteworthy. I can't go through all the bubbles in this video or else it would be way too lengthy. Probably we can talk about that in some other video. For now, let's go on to our fourth stop. Our fourth stop is at the technical analyst. The people over here belong to the Castle in the Air school. They study the past movements and predict the future movements by creating charts. They expect their tools to tell them which castle will be built on air and believe momentum in market, which means a stock going up will go up and a stock going down will go down. Stock market does have momentum, but sometimes stock market overreact or underreact to a news. These people often make money, but not always. Stockbrokers hire them so that investors would do more in and out trading and they can get commission from those trades. According to author, if you follow them, you might end up in short-term capital gains and pay larger taxes. Now let's walk ahead to our fifth stop. Our fifth stop is at the security analyst. The people over here determine the proper value of stocks, usually called as intrinsic value. This seems to be a good option to go with, but again, they have their own list of flaws. Firstly, they cannot predict influence of random events like natural disaster or terrorist attack or something else which is uncertain. Second, they might be misled by the accounts of the company. Some companies fake their accounts to give an impression of being a winner. Third, they might themselves make some error. Now let's walk ahead to our sixth stop. Our sixth stop is author's den. The author believes that the best investment is to invest in index funds. Most of the mutual funds have not outperformed the market. At times, there are madness in crowd like for bubbles, and many people choose wrong options under social pressure. Index funds have mostly been profitable if you hold it for long. For example, let's consider the trend of S&P 500 index fund. If you hold it through lows, you will always be profitable. Though the author suggests other index funds related to emerging markets more than S&P 500 index funds. Apart from this suggestion, author gives a few exercises which would make you rich slow but for sure. Few of them are: first, save money on regular basis. Second, get an insurance for uncertain times. This is a must if you have a family and also have cash reserves for emergency. Third, invest. Buy index funds, bank CDs, treasury bills, and so on in order to beat inflation and retain your purchasing power. Fourth, own your house instead of renting it. These are the few takeaways from the book A Random Walk Down Wall Street, written by Burton Malkiel. There are many more knowledgeable and fun things about Wall Street from author's perspective, written in a humorous way. You can buy the physical copy of this book or the audio version from the link in the description. Smash that like button if you like this video. Share it with your friends and family to let them have this walk. Subscribe to our channel Send the Road for more such content and hit that bell icon to get notified as soon as we upload a new video. Watching knowledgeable videos shared by me is also one of the ways to get the knowledge of the books written by experts. Remember, small changes each day can create huge impact at the end. Keep learning, keep growing. This is Chitra Deva signing out for the day. Meet you all next week with a new book summary.